Welcome back to the channel. My name is Steven. I'm a pharmacist and I own 52 units of real estate. So today I want to talk about my $1 million stock portfolio. So a lot of people don't know that, yes, most of my net worth is in real estate. About $5 million of my net worth is in real estate equity. But I do own a $1 million stock portfolio, which is a combination of my brokerage account, my 401k, as well as my IRA, right? So I want to really break down my $1 million real estate portfolio and then what I learned about investing in stocks more passively, right? So for me, I first started getting into stocks back in 2013 when I got my first job as a pharmacist, right? Because I started making money for the first time and only knew about stocks as a way to make money. So I remember I would read a bunch of like news articles and journals, and I would just buy like random stocks. Like I remember I bought like GoPro stock, which lost money. I bought like a 3D printer stock, which lost money. And ultimately, I was just gambling. I didn't even know I was gambling, but I was gambling, and it wasn't much money. It'd be like maybe 1,000, 2,000, or $3,000 that I would put into like these stocks. Like I remember I put like $3,000 into GoPro stock, and then it just tanked after it went IPO. And then I bought like a 3D printer company, which the stocks tanked as well. And ironically, in 2013, I think I bought like Tesla stock, which if I kept that since 2013 until now, it'd be worth a lot more. But I think it doubled. Like I think I bought for like $100 a share, and it was up to 200. I just sold it and took like a $2,000 profit, which I had to pay taxes on, right? But had I just kept it, it would be worth a lot more today, right? So basically through that experience of me, basically losing a couple $1,000s, I learned that number one, I don't enjoy like day trading stocks or buying stocks and holding it short term because it just didn't really, I didn't want to do the research. I didn't want to put in the time for that. And at the end of the day, it's speculative, right? For me, at least that's the mindset I had. So once I learned that, I was just kind of like, all right, like what's one company that I just can buy that I think it's stable. So I bought like $10,000 worth of Apple stock like in 2013, right? I was saving money, and I basically put $10,000 into Apple stock and just held into it since. And obviously, hindsight's 2020, but it's done well. Apple pays dividends on a quarterly basis, and I think now my Apple portfolio is about 100,000 of a million. So it's about, I'd say, 10 to 15% of my portfolio, right? So I think I just bought Apple stock a lump sum of 10,000 back in 2013, and then I remember during COVID, Apple stocks were not doing so hot during COVID, like March of 2021. And I remember I always said, well, when stocks don't do well, I will put another lump sum. So I think I put another $20,000 into Apple stock. So I'm all in for about maybe 30, $40,000, and now it's worth about 100, 150K. I don't remember the exact numbers off the top of my head. And then outside of that, so basically, I like Apple because it's a big company. It's not going anywhere. The customers are very sticky. I don't personally use an iPhone, ironically, but I own a lot of Apple stocks. But I know people who do buy Apple products. They're very sticky customers. They always upgrade to. They go from the iPhone 14 to the iPhone 15 to the iPhone 16. Same with the MacBooks. Like I don't own any of that, but like I just know the customers are so sticky and loyal to iPhones. So obviously the stock has done well for me, and all I did was I just held it, right? Like I learned my lesson. Like had I just held my Tesla stocks instead of taking that quick $2,000 profit, it would have been worth a lot more today, right? That $2,000 Tesla stock would have been worth way more today, because I bought back in 2013. But hindsight's 2020, right? So from that initial short trading, I learned that I don't like kind of that short term hold mindset of stocks, and I don't like actively being involved in stocks. So what I started doing was I started buying index funds, right? And I basically started off in 401k. So typically, if you have Fidelity or Vanguard, those are the two big players. But usually, Fidelity has an S&P 500 index fund, Vanguard has a S&P 500 fund, or whatever it looks like. T. Rowe Price has a S&P 500 fund, but you just want a broad index fund that you just buy every month, right? And don't think about it. And once I read like Tony Robbins' Money Master the Game, I think I found like a three index fund portfolio, which I still follow to this day, and it's done well for me, right? And I think it's literally like, I think it's like, I want to say it's like 70% total U.S. stock market through Vanguard. So most of mine is just through Vanguard, but you can do it through Fidelity conceptually. So I have the total U.S. stock market index fund through Vanguard, and I allocate 70% of my money every month towards that index fund. I have 25% allocated towards the total international stock market minus the US. So I'm diversifying, right? So I do believe in the US economy long term, right? It's a capitalistic market. So I believe in it long term, right? It's doing great. But I also want to diversify of international companies, right? Like there's like Toyota, there's Honda, there's Nestle, there's a bunch of other companies too. So I want 25% uh, in international index funds. And also I do a little bit of bonds. I'm not too crazy about bonds, but you want to diversify a little bit. So right now I do 5% into bonds. So every month, if I, let's say, put $1,000 into my index fund portfolio, 70%, which is 700, goes into the total U.S. stock market. 250 will go into the international stock market, and then 50 will go into bonds, right? And that's automated every single month, since 2013, right? And over time, the market's done well. Obviously, during COVID, it's done well from 2013 all the way up until today, right? And it continues to go up and continues to do well. So for me, I just kind of automate it and forget it, right? Like every month, I just automate, whatever I can afford. And I do the same thing with life insurance. Like when I invest in life insurance, it's literally the same thing. I just buy like S&P 500 and dump it in there, right? And I have like an international index fund, which I dump it in there too. So it's really not rocket science, right? I just signed up for my 401k through Empower, and I was like, all right, they have a Vanguard S&P 500. I'll just do my same allocations, right? And you want to just consistently buy the index funds, like whether it's high, it's low, going up, going down. You buy every month, and your dollar cost average, and you buy it, you set it, you forget it, you automate it, forget it, and then it just compounds over time because those pay dividends as well, right? Like the Vanguard index funds pay, I think, dividends quarterly, and the bond pays dividends monthly. So over time, you just set it, forget it, and it grows, right? And it grew to a nice portfolio of about 1 million now, and that's really it, right? So luckily for me, I never really got into day trading. I got into early on, lost a couple thousand, and realized that's not for me. So now my stock portfolio is just a bunch of Vanguard index funds and a bunch of Apple stocks that I bought, and that's about it, right? It's really simple. Obviously, my Apple stocks have done well, so it's kind of carrying the team. But index funds, over time have steadily gone up, and will continue to compound and continue to grow, right? So that's all it is. Like, it's not some super secret hack to build $1 million, index fund or stock portfolio. It's literally, I just bought one good stock, which I thought was Apple, and just held onto it long term. I could have kept Tesla long term and probably would have made money. And who knows, maybe the GoPro and that 3D printing stock might have done well long term too, but I just hold it and never sold it, right? But anyways, that's what I do my index funds now. Like my plan is to hold it and never sell it, and then basically live off the index fund or live off the dividends, or eventually when I'm ready and want to offload, I can start taking some money out of there. But right now, I just literally automate it and forget it, and that's my allocation. So hopefully you got some value from this video. Let me know if any comments or questions below. I'm curious to know what you're doing for your stock portfolio. Like, are you day trading? Are you just buy and hold? Are you index funds like me? And let me know if you have any questions. If you want to diversify into real estate, specifically multifamily real estate, and you want guidance, check out the mentorship program in the link below. Otherwise, let me know if you have any questions. Love to answer your questions, and please like, comment, subscribe. Thank you so much.